Well, good morning, ladies and gentlemen, and welcome to this morning's webinar. My name is Ben Renshaw from HFMA. I'm going to be chairing the session this morning. As part of HFMA's efforts to improve our efficiency and provide training and development in a sort of more accessible and cost-effective fashion, we're piloting this new method of training delivery. If the feedback is positive from it, it's something we're going to be looking to do in the future, providing some more of our workshops in this fashion. Although it's probably worth pointing out at this point that it will sit alongside rather than replace our existing selection of conferences and e-learning, so it's not a complete replacement, but should hopefully make life a bit easier for some people to access it. In terms of how the presentation is going to work today, I'm shortly going to be handing over to our presentation team from Deloitte, Mark and Steve, who are going to go through the presentation, which you should be able to see on your screen as we go along. If you have any questions at any point during the presentation, there is a question box hopefully on your screen also. All you need to do is type any questions you have into that box and click send, and that will come through to us here. We will then have a Q&A session around about halfway through. I'll put a few of the questions that have come in to Mark and Steve, and then after they've concluded their presentation, we'll have another Q&A session so that any final questions can be responded to by them. We're joined today by quite a number of members from the finance community from all across the country. Just to get a feel for where exactly the attendees are from today, anyone who, if you could all type in, or anyone who feels like it, type in their whereabouts in the country you are listening from, and just click send, and then we'll have a look at who we've got basically and whereabouts you are. Either you can put in a city or a particular area of the country, or if you're taking it apart from abroad today, then obviously you can type that in and send it across as well. Oh yeah, we've got a few coming in. Bristol, which is where we are. That makes sense. Bury, South East London, North West England, Sheffield, Dorset, Coventry, Manchester, Blackburn. So that's great. Obviously, a huge variety of places coming in. So that would suggest we're already reducing our carbon output just as a result of having it online today, which is a good start. And that moves us nicely on to today's webinar, which is looking at the CRC Energy Efficiency Scheme. Now, although the details of the scheme have been around for a while, the introductory phase of the scheme started in April of this year, with approximately around about 180 NHS organisations potentially affected. The scheme is going to have penalties for anyone who isn't taking part, but it also presents an opportunity for the higher performing trusts to benefit financially and reputationally. So it's well worth taking action now to ensure that you're well prepared for it. To go through the details of the scheme, a few more details, I'm now going to hand over to Mark from Deloitte, who's going to start the main presentation. So Mark, over to you.
Thanks, Ben. Firstly, we're delighted to have the opportunity to present to a HFMA audience. As people may be aware, we do, as a firm, quite a bit with HFMA. So myself, I look after our sort of accounting advisory team. You might ask, why then am I presenting on CRC? But as hopefully you'll find out through this event, this webinar, that finance have a key role to play here, and finance reporting and accounting is important. But as I said, we do a fair amount with HFMA. I did an event for East of England in Cambridge on Friday, which was a face-to-face session. Session on Friday, I talked about financial reporting. Colleagues talked about cost reduction, and there was also a session on the broader green agenda. And hopefully through today's session we'll bring out some of the flavour of the fact that there is a financial reporting angle here. there is a cost reduction angle here, and obviously there's also the broader green agenda angle. So all these things to an extent are linked. As part of my financial reporting session on Friday, I talked a lot about IFRS, but I also talked about some of the things coming down the pipes from HM Treasury. We've got sustainability reporting in these slides as well as one of the things coming down. But, you know, life isn't getting any easier, unfortunately, for NHS finance professionals, and as I say, this is something that they need to manage, and hopefully this will prove useful. So in regards to that, going to have some polling questions through the session, because obviously, unlike standing in front of a room full of people, it's important to try and keep this sort of interactive in a different type of way. So some polling questions. The first polling question then is around your personal backgrounds in terms of whether you're sort of DOF or assistant deputy DOF, other parts of finance, or whether you're estates, facilities, energy area, or whether it's specialist carbon sustainability expertise. So just give it a few more seconds on the polling. Okay, so we've got a sort of even mix around estates, specialists and others. And we've then got 31% are DOFs or deputy DOFs and 50% are other finance. So, you know, predominantly a finance audience, which is great because for the reasons we'll explain, this is becoming a finance issue, but it's also akin to IFRS. Very useful that we've got other parts of the NHS organisations involved, because clearly this is another one of those areas where you need to work together. In terms of the aim of what we're going to cover today, well, you know, put it in context to talk about CRC, how it fits in the green agenda. Going to recap on the legislation, so unlike, akin to much of the other sort of financial reporting things that you have to deal with, you know, this is driven by legislation. Going to talk about the main considerations for your organisations. There's something about minimising the risks of non-compliance fines. Obviously, that will save money. There's also, though, something about financial and reputational benefits. Steve will say, you know, they are going to publish sort of league tables in this space. Clearly, you want to be well positioned. There's also something here, though, about, you know, if you can reduce your energy consumption, can reduce your carbon, you will save money. So there is a cost reduction angle embedded here. And towards the end of the presentation, we're going to talk about some ideas as to how you might finance some of those cost reduction investments. And I've already said, you know, key role here for the finance community. So moving on, bit of context. This is around the NHS contribution to climate change. So, you know, annual energy bill, approximately 400 million. There is an aim for 2012-2013 as part of the efficiency drive to take 60 million out of that. So that's quite an ambitious target. NHS accounts for 3.2% of total England CO2 emissions. Given the Climate Change Act commitments around CO2 emission reductions, your 3.2% is very important. In terms of how those emissions are generated, you know, the green agenda is very broad. There's the road transport, there's the demand and the transportation of food and goods. There's the waste side of the equation, as shown there. You know, 1 in every 100 tonnes of domestic waste is generated by the NHS. Clearly, though, you know, very large organisation employing 1.3 million people. So, you know, the scale of the commitments under the Climate Change Act mean that the NHS had a big part to play even if it wasn't for the cost reduction agenda. But obviously, given the cost reduction agenda, it's even more important. So, cutting energy consumption by 15% could save you 50 million a year. As already said, your task by 2012, 2013 was saving 60 million a year. I apologise for the busy slide. I'm not going to talk. Don't worry, I'm not going to talk about this in great detail. But this is just, deliberately to show you how complex this area is. So this is setting the scene in terms of all the legislation that's out there. The key pieces of legislation we're going to cover today. Well, at the bottom there, you've got the Climate Change Act, the requirement to reduce emissions by 34% by 2020. 80% by 2050. So there's big targets that underpin all of this. And then obviously at the top we've also got the CRC Energy Efficiency Scheme, which is the main focus of today's session. In addition, though, there is the NHS Carbon Reduction Strategy, and as people will be aware, there's the NHS Sustainability Development Unit body set up to provide guidance in this space. So, key drivers going to cover today, CRC, but also there's that cost reduction element. At that point, I'm going to hand across to Steve.
Thanks, Mark. And so getting down into the CRC Energy Efficiency Scheme in particular now, and this is something that I've been following over the last 18 months or so and working with a range of clients in terms of the impacts of this legislation on their organisations. And really wanted to cut to the chase on why finance should be interested. I'm sure you will appreciate some of this being on this call, but just to kind of reiterate. And that's really around what are some of the risks associated with this scheme. And I think so first and foremost, the key risk to highlight is around non-compliance fines, as Mark has mentioned. On paper, could easily be significant. Exactly how the EA, the Environment Agency, who are administering the scheme, will apply them is to be seen, but they could be into sort of hundreds of thousands of pounds territory. And there's a reasonably large range of things that you can get wrong, from failing to buy enough emissions credits to late, inaccurate, or unevidenced reporting. Also, there's going to be a need for cash to go out in next April, to go as a payment out to the Environment Agency. And there's a lag before the corresponding cash inflow in October of next year. So there's a management issue around that cash flow piece about being aware of timings and quantities to know how much is necessary for budgeting. Mark's mentioned briefly the fact that there will be league tables of carbon performance published, clearly attracting some interest, though not as much as obviously patient care metrics in terms of performance. Still something to be aware of in terms of the fact that that's going to be more on the radar of a variety of interested parties. And then finally, there's also there's money to be made or lost from both the energy savings and from the way that CRC allocates bonuses and penalties from high performers to from the low performers to the high performers. So again, there's an opportunity there around not only saving energy costs, but also performing in a better way in the CRC tables. So those are the risks, but who is impacted? And if you're on this call, I would guess probably you. So very briefly, also been around for a while, so I expect this is probably something you're aware of. But just to recap, firstly, it's mandatory if you meet certain criteria for inclusion. Those criteria, as shown here, based on volume of electricity use primarily, so that if you had an electricity bill, roughly speaking, of over $500,000 in calendar year 2008, then you're going to be caught up in this scheme. Once in the scheme, all non-transport energy, broadly, is regulated. So not only electricity, but also including gas and non-transport fuels as well. As context only, really, the graphic on the right shows that a number of different sectors across the public and private sphere are going to be caught up in this. Nothing more than for information, really, although I suppose one day you could end up, at least through an exchange, trading allowances with Tesco or MOD, or even an organisation like ours, who are also in the scheme and whose preparations we've also been involved with here. Plus, just to note that as the intention is to have a single large official league table, comparisons, at least potentially, may be drawn between sectors. So this is a piece of regulation that's come out of the Department of Energy and Climate Change, but it's administered by the Environment Agency, and that's just a little piece around who's in, which you probably are familiar with being on this call. And again, very briefly worth reminding ourselves on how this works. Ultimately, a cap and trade scheme, so eventually government will limit the total number of emissions that the whole group of CRC participants can emit, and participants will then need to allocate those allowances around themselves by trading. But for now, there is some lead-in to this scheme, so we don't have full running until 2013. So we have a reporting year only now, which we are in the midst of, and ends in April 2011. That requires reporting on emissions, which will become an annual process. From April 2011, officially year 2 of the scheme, allowances come into the scheme for the first time. These are the permits to emit, essentially, with the general principle being buying them in advance for your expected emissions. So in the first 2 years, again, of the allowances, so that's April 11 and April 12, there will be, again, as the scheme is building up here, a fixed price for those allowances of £12 per tonne of carbon dioxide, and you have to work out your carbon dioxide from your energy use. The key message here being you need to have enough of these at year end for your actual outturn emissions in reality. Performance in the CRC is judged by quite complex criteria in terms of ranking in the league table, but essentially based on carbon reduction performance, and that'll be published annually in a league table, and moreover used to recycle revenues from allowance sales in preference to better performers. The diagram at the bottom there shows the percentage of recycling, and that increases in time. So the basic idea being, if you are always in the middle of the league table, you'll roughly speaking get the money back that you put into the pot earlier in the year. Whereas if you're at the bottom, you'll pay a penalty which will go to the top performers and which increases year on year in percentage terms. And then finally, bottom bullet is the from 2013, pending any governmental rethink around the scheme, the plan is that this will be in full flow, and you will need to buy allowances not at a fixed price but via an auction process, quite possibly at higher value than the current rate. Very crucially, though, the scheme will be administered and regulated by the Environment Agency, who will audit around 20% of organisations each year to ensure the robustness of the data and using the stick of the fines to keep errors to a minimum. So that's obviously something that will be on the agenda. Just putting that on the timeline here, and you can access this via Deloitte CRC brochure. I've got a link at the end of the presentation for that, and very happy to share any other copies with HFMA. But key dates really being current registration, which somebody in the organisation needs to be on top of, if not already done, then by September at the very latest. The next key date being purchasing allowances in April of next year. And then July is reporting on the data which you should already be collecting for this current year to the Environment Agency. Then we're into potential Environment Agency auditing territory. And the first league table will appear next October. At least that's the current plan as we understand. But the collecting data and evidence for that data, crucially, is a continuous process throughout this, and needs to be checked against the detailed requirements of EA to make sure that that's under control. Down and they're fully understood. I think that's leads on to a next poll question which we've got here, and I just want to ask you here around responsibility for signing off for CRC reports.
I think we've just lost Steve's audio briefly there, but as you can see, the poll question's up on the screen. So all you need to do to respond to the poll is just to click on whichever is most appropriate for you, and we'll start getting the results through shortly.
Thanks. Can you hear me again now?
Yeah, I can hear you. That's great.
Great. Right, thank you for that. And hopefully I'm back on audio again, and hopefully you can see results on the screen here. Stateside, which I think is consistent with what we've seen, and clearly indicates a need for finance professionals and other directors to take an active interest in how this is actually being dealt with within the organisation. And another reason for measurement comes in the form of amendments to the FREM, as Mark mentioned previously. Just to flag this at this stage, really, in relation to kind of carbon and wider environmental reporting, this is something that's impacting central government, and so we're watching this space to see the impacts for NHS bodies. But essentially, the requirements in the FREM to have annual reports, including sustainability data, on top of obviously the existing financial requirements. So again, that's a very interesting kind of piece from Treasury to put that in the FREM, kind of pointing towards getting finance heavily involved in measurement and reporting in this area. I know they're particularly keen around the idea of having that level of scrutiny from finance professionals and quality in the data. Ben, I think if we have any questions at this stage, I'd be very happy just to pick those up while we've got the chance.
Yeah, sure. Thanks, Steve. If anyone has any questions at this stage, you should have a box on your right-hand side of your screen. If it may have shrunk down, in which case there's a little red arrow in the top right-hand corner, which you can click on to extend that little box again. And if you have any questions for Steve or Mark at this stage, if you want to type them in and click send, and then I'll put them to Steve and Mark.
No. So let's have a look then at,
Sorry, Steve. I've got a few questions coming in now, if that's okay.
Yeah, of course. Perfect.
Do you want to read them out for us then?
Yeah. Can you confirm what FREM stands for?
So FREM is the Financial Reporting Manual issued by Treasury, available on the Treasury website, agreed by the Financial Reporting Advisory Board. FREM is what drives the manual for accounts. So central government departments for the current year are doing a dry run of sustainability reporting, and it will be baked into the FREM for next year, assuming it goes well. Our assumption is that because it's what the Department of Health will need to do, they will take the opportunity to put something into the manual for accounts, and I guess also monitor will do similar for, I think it's the Foundation Trust FREM.
Okay, another couple in here, if that's okay. Do you have a feel for how many NHS trusts are outsourcing the compliance side of CRC?
No, I don't think we do. And I guess outsourcing these types of things is an interesting question. I think there's two aspects to that. One, which I will pick up a bit later, is around the fact that if you've got an outsourced estate anyway, then it probably makes sense to let your outsourced provider do that. Indeed, they may be required to do it by the contract anyway. So if you've got a PFI deal, you may expect your PFI partner to do that anyway. Second aspect of it is your own estate. Does it make sense over a long period of time to pass that all outside the organisation? I think I would probably argue that in the same way as I would not recommend anybody to outsource their IFRS transition, and as I said already, that's been one of my area of expertise, I probably wouldn't recommend this being passed out in its entirety either for a long period of time. Clearly support can be provided, but I think it is finance, estates, HR within the organisation that need to work together in this space.
And certainly just to add one quick point to that, whilst perhaps the data collection can be outsourced for some assistance to that, ultimately the responsibility, accountability for registering, for providing the data reports that does remain, that can't be outsourced. So, at the very least, keeping on top of those requirements is a minimum.
Okay, another couple, just brief ones. Are you happy to circulate the presentation slides after the session for anyone who would like them?
Yeah, very much so. We'll need to make sure it goes as a PDF and is sort of badged as ours. No, happy to do that. And as Steve has already said, there's links, I think, at the back of this to our website, and some of the slides you're seeing here are extracted from some of the materials that we have available to help our clients already.
Great. And then perhaps one which may well be being covered in the latter part of the presentation, but please could you expand further on the carbon trading element?
Yeah, so if I just do a very brief piece around that. Essentially, there'll be, initially in the first 2 years, there'll be an unlimited number of allowances available. So we would expect that, generally speaking, they'll be acquired from the government, from the Environment Agency for the first couple of years, although there is a fixed window, so there will be some trading between organisations. Basically that means that there'll be a market price which is set for these allowances, and essentially it'll just be a kind of supply-demand balance between those organisations who find that they have bought a good number of allowances but their emissions came in less than they expected, versus those whose perhaps emissions came in more than they expected. And I guess one of the things to point out here is that the scheme doesn't take into account anything like weather variability. So in the event of having a very cold winter, for example, there may be participants who are finding themselves understocked, in which case they would need to go to the market to buy those. So that will be a very interesting thing to see how that works. Certainly we've seen it historically working for other carbon trading schemes, the EU scheme with power generators, etc. And there's been a highly sort of fluctuating price around that. So yeah, absolutely, that is a key area. And particularly around carbon strategy there, you really need to think around what is your approach to trading? When do you acquire allowances? And what is your approach to doing that? So yeah, I think a very good question.
And in the context of the NHS, don't know for sure, but I imagine the department will have a role, and I can certainly see a scenario where, as we've seen on things historically, you get to year end, there's a bit of a divvy up, and if, one trust is over and another is under, they perhaps drive some sort of trading system. I don't think that's an unreasonable assumption to say that, with many organisations within the NHS, you might do some inter-trust trading rather than have to go to the market and buy them from Tesco's or the MOD or Deloitte.
Just one final one that's just come through. Can unused allowances be carried across years as opposed to trading?
My understanding of that is that they can be within phases, and the first phase is the introductory phase, which is before 2013. So there can be some carry forward between there, but they can't be into the first cap phase, so into April 2013, and that's because as I understand that the allowance price will then be driven by the market cap, and therefore can't be mixed with the kind of unlimited £12 a tonne allowance. So yes, to an extent, that should be possible.
Excellent.
Okay.
That's all the ones we've got in at the moment. So if I'll leave you to carry on with the second part, and then we'll have another Q&A session towards the back end of the presentation.
Fantastic. Okay, thanks for that, Ben, and for the questions as well. Just in terms of the second half of this piece, really want to talk about, okay, what do you need to do, and looking at that in two halves, really. So this slide, which you've had probably staring at you for a while now, is really around kind of the measurement side, if you like. So what do you need to do to get that in order? And I think, it's as you can see from the arrows, it's kind of going from top right round, and firstly around readiness and really understanding what the impact of this mandatory legislation are on your organisation, particularly what you're responsible for in a legal sense in terms of energy and sites and even legal structures. I think that's very important. There isn't the key message here is there isn't really any choice as to what you are responsible for. You are responsible for what you are responsible for. So knowing what that is and knowing the key requirements is obviously key. Moving around, a strategy for collecting and measuring the data on a regular basis and keeping evidence needs to be in place. Who's going to be doing that? What do they need to collect? Are they doing it? Is there a kind of controls process around that to get that right? So I think that's pretty clear in terms of mapping that to the equivalent process for financial data. Again, on a similar parallel, systems implementation, what do you need in terms of systems here? Maybe what you've got is absolutely fine in terms of existing methods, but do you need other technology to do the job? How are you going to approach that? And I think that's both in terms of historic information for reporting and forecasting. You need to have good visibility of your data, and that's going to be key in this scheme, to be able to buy allowances in advance, but also to know where your energy reduction opportunities are. So I think having the tools to be able to do that is obviously important. Again, reporting, clearly there's a regular reporting basis to the Environment Agency, but also, mentioned along the lines of the FREM, there's other requirements for information here. How are these being consistently communicated? How is the burden out of doing the reporting being minimised? And in terms of the allowances, the accounting tax implications arising for treating those as well, obviously something that will be on your mind to consider. And I expect you'd expect an audit firm to mention assurance, but obviously important to have some kind of internal comfort or external comfort around the potential information that the Environment Agency could audit, given their role in terms of doing audits of information and their possibility of penalty if they don't have everything where they need it. And just a slide here on putting that into what is minimum versus what is the proactive approach in CRC. And I guess my encouragement would be to move towards the proactive approach. But in terms of what needs to be done, obviously getting the reporting requirements, registration, evidence right to avoid fines, internal or external assurance may help this. I think those are the key things to do what you need to do on in this scheme as a minimum. But if we look on the proactive side, that's really around looking at this as a opportunity of looking at energy savings in a holistic way, potentially for better recycling payments. So, looking at what opportunities this might provide in terms of that cost-saving piece, and potentially also an opportunity to look wider than the CRC boundary, which I mentioned is kind of mainly estates and non-transport fuels. What kind of savings can be achieved in transport? And certainly we've worked with clients where there are major savings that can be made in that area in terms of carbon reduction. So perhaps use the opportunity to look wider at the opportunities for cost saving. And on that note, just thought it would be interesting to see where you as organisations imagine that you, in terms of your approach to the CRC performance. We've got a polling question around this, and I'll just start that off now. But that's really around, are you looking to be top of the league table overall? Are you looking to be in a league table with your peers? Coming out well in that sense. Do you want to just match what's going on in terms of benchmarking, or are you going to let whatever happens happen and see where you appear in a league table and the kind of consequence impact on your recycling that you have, or do you not know yet what that is? So if I just let that run for a moment, it would be great. I just think while that's running, and I'm just letting that go, thank you for the answers there. This is around strategy. This slide. It's some questions that you might think about, and I guess it's some of many, but just to give a flavour. And I think just the first one there is around, are you looking to be a market leader, middle of the pack, or compliance in relation to these issues? And I think if we just have the poll at this stage, some interesting results. So if I just share those with you, hopefully you can see that now. And not a surprise that this isn't on the agenda to be, for many organisations, I guess, to be leading overall, but very credible for some to do that. But obviously an enthusiasm there to lead amongst a sector group, which I think is great. But equally, understandable around benchmarking as well, and trying to understand what's going on with that. So a full range of options there, interesting result. And I guess don't know comes out quite high. That's interesting. I guess having an approach to this would be something that I would recommend is worth kind of formalising up front in terms of how you want to do that and what actions you need to take accordingly to make sure that you are pointing in the direction to achieve what you're trying to do here. And so on that note then, around pointing yourself in the direction that you want to go, particularly on the more proactive side, I think this is really around, do you understand what you're trying to achieve and what's at stake? What are the various moving pieces in terms of energy costs, carbon costs, tax opportunities and grants, and what do they do to your financial analysis of options? And I think, once you've got plans, how do you implement those in terms of responsibilities and accountability for actually improving, and in terms of any change that's needed? So actually, we've seen examples of carbon management plans which look fantastic on paper and are all nicely put together, but don't actually achieve what they achieve. So is there something around kind of behaviour, accountabilities, etc. there? And then also, just finally, just wrapping this back into the reporting bit, communicating the results of that in an effective way. Just before we move on to talk about actually achieving improvement, I'll hand you back to Mark. Just one more polling question, if you will. This one is around carbon management strategy, building on what we've just what I've just referred to there. And the question here is, is your carbon management strategy kind of fully financed, taking into account grant, tax opportunities, energy savings, etc.? Do you have confidence that that the financing is in place? So if I just let that one run for a moment, and we'll have a look at what comes in. And perhaps while we're doing that, Mark, I'll hand you over to actually what do you need to do within this space to achieve improvements in the CRC?
Great, thanks, Steve. So we've talked a lot around the measurement piece. We've talked in detail around the CRC process and the things that you need to be doing as organisations. We've also, because I think it's an interesting question, asked, where do you want to be? Are you happy with the sort of measurement and the status quo, or are you looking to improve? And this slide's about improvement. And obviously we've now got a poll running at the moment around, and how are you going to finance it? And, it's similar to many other cost reduction areas in that there's an upfront spend in many instances in order to save, and spend to save in the public sector is an interesting topic. So, no surprises really on this. We've got 56% of people saying, is that strategy financed? Don't know. And 44% saying, no, it's not sort of financed. So clearly there's work to be done in that area. And I guess I am aware, having got involved in the green agenda and having a sort of financial reporting and financing background, that there's a lot of talk about the measurement piece, but often people don't talk about the where is the money going to come from, particularly in the current environment, to pay for these sort of spend to save ideas. So in terms of improving your performance, starting with the sort of top right there, carbon management, that's the same sort of strategy segment that you saw in the measurement wheel. So, the strategy clearly starts with measurement, moves across then to improvement. Opportunities to improve, well, there's a lot you can do in the property space. We've already said that property is quite important to this. There are things you can do in terms of new build, but also retrofit to your existing estate. Disposals, clearly if you reduce your floor area, chances are your emissions and energy usage will fall. And financing, question, does private finance have a role to play in this? So property, one. IT is quite energy heavy. There are different things you can do in the IT space, and there's concept now of green IT. There's also the idea that there's different ways now of hosting your IT, and unsurprisingly this links neatly in with many of the things being discussed at the moment at Treasury around sort of different ways of hosting IT, different ways of brigading services. Procurement management is we've got there as number 3. So, this isn't just about your own energy usage. This is potentially about your supply chain, and you need to understand, as I think you do to an extent already because you tend to quiz your suppliers on these sort of things, what are they doing in this space? And it's important to monitor the outcomes, what the suppliers tell you. It's also important to negotiate. If you want them to do something different, you should use some of the levers to cause them to do something different. 4, people behaviour. A lot of energy costs can be reduced, emissions can be reduced, and money can be saved just by changing people's behaviour. So I mentioned earlier that I think HR have got a role here. Well, yes, they do. It's about training and making sure that people understand what to do, so the sort of organisation change there. And then finally we've got a segment there on green energy, and there's something about the source of your energy as well as the usage of your energy, so on-site generation, and also mentioned upfront waste as one of the wider green agenda points, but there's also something about can you get energy from waste, which in turn may reduce your sort of waste contribution. So a lot of ideas there around improvement, and as I say, hopefully all of those should feed into the strategy. So we've got a few case studies in here around where we have done some work. So there's a question in the Q&A we had earlier as to whether you should outsource all of your sort of compliance in this space, and I sort of said probably not. But clearly there are point things that have been done, and those point things, as we see from the slide there, have saved money. So this is on the estate side, and much of this will be on the estate side, and it's helping to produce a carbon reduction strategy, more importantly, an action plan to implement the strategy. And as the jigsaw on the right-hand side shows, there's many components of this, finance, the built environment, workforce, etc. And this doesn't necessarily strictly play into CRC alone. This is part of the broader green agenda, but it did produce cost savings of, as said, in excess of £150,000 per annum. So, over 25% of the energy usage. Also, another feature of this case study is much of it was zero upfront cost. So, you didn't have to spend to save. You just saved, which clearly is great news. So, a few lessons from the work we did at this PCT. Got to have robust data. It is important, clearly, to demonstrate financial savings tend to get, particularly in the current environment, a lot more focused if it can bring some savings. And this is just all about sort of good practice, including some of the things that didn't require an upfront investment. So there's one case study. The next slide. So as I've already said, I've done a lot of sort of how do you finance deal work historically. If you do need to spend to save in this space, well, starting on the right-hand side, there are grants available for investment in things that will produce reductions in emissions, savings in energy. So there's some grant funding that you should at least consider. You obviously have your own capital budgets, although I appreciate they are really tight and potentially, in some cases, diminishing, probably less so for NHS than for other parts of government and local authorities, but capital financing difficult. Certainly for foundation trusts, shouldn't forget prudential funding. I know your prudential borrowing powers are a lot lower and a lot less than and more strictly controlled than they are in local government, but obviously anything that sort of spend to save, prudential funding is an option. So those are the three on the right. Moving across to the left, this is more complicated, but there are some private finance solutions that you can put in place to cause, for example, retrofit of more energy efficient estate. So I suppose this is sort of akin to some of the other public-private partnership structures we've seen. You've got a bank, a funder, you've got the public sector, you've got contractual arrangements with the private sector, and some outcomes. And, I think it is possible to put together a business case that says the savings will mean that this level of upfront investment is worthwhile, and here is the way that that can be made. So I think it is worth considering the private finance solution if you don't have your own capital, if you can't identify the grants, and if, as we've said, the prudential funding is tight. And once you're into the private sector side of this, it is worth flagging there are all sorts of tax incentives to the private sector to try and make investment in this area. They may come into play in this space. Also, we made the point that where property is outsourced, you might be able to pass responsibility around CRC and sustainability across to the private sector counterparty, so which could be attractive. Second case study we have here is King's College. So people may be aware that recently Drivers Jonas, who are a property consultancy, joined with Deloitte to form Drivers Jonas Deloitte. So now on the property side, we've got some real critical maths. So this is a deal that they were involved in. As the slide says, issue around the boiler efficiency. Old, inefficient, high risk of failure, over-reliance on air conditioning units in critical areas. Emergency generators weren't able to cover it. So plans for a new energy centre, which would produce, suitable volumes of energy as required. Originally, design, build, finance, operate plan, so that's a private finance example. But actually, in the end, it was identified that there was some grant funding available, I think, based on what I'm told by Drivers Jonas Deloitte colleagues, that they went down the grant funding route in the end. And yeah, this is just an example, and again, it's not CRC alone, it's the broader green agenda piece, and it's also cost reduction. This is an example of the sort of things you can do, in this case, combined heat and power plant retrofit into existing NHS estate. So a few concluding remarks. As already said, we've gone into, I think, and I hope, quite a lot of detail on the CRC mechanisms, how it's all going to work, and obviously there are some important milestones there, some of which are very urgent. More information available on the website around that, and obviously more information available on the NHS websites that we cite at the end. But I think beyond the CRC and beyond the measurement piece, to say hopefully an interesting question to talk about, how do you plan to join us as organisations? How proactive are you going to be? And then we've broadened it out perhaps into the wider green agenda and, talked about sort of, the cost reduction and how you might finance that. So, yeah, appreciate it's been a fairly rapid 45-minute session, and we've had some polling questions as we've gone, but hopefully we've covered a fairly broad agenda through this and got you thinking. I think that probably leaves sort of 10 minutes for questions, which Ben will take and feed across. Also, we've got there the final slide, as said, contact details for Steve and myself, and links to the Deloitte website and to links to various very useful NHS sites as well. So happy to take any questions bar Ben.
Great, thank you very much for that. We have already had a few questions through, so I'll put those to you if that's okay. First of all, has the scheme got loopholes which allow organisations to abuse the scheme? The gentleman obviously saying that he would not take part in anything like that, but others may do.
Yes, looking, making sure others don't take advantage, exactly. Yes, I'm sure there are, and I'm sure people will look to capitalise on them in some cases. I mean, it's a very complicated piece of legislation. It's really the first of its type in the world. So, it's bound to go through a kind of iteration as well in terms of now and the second phase of the scheme. In terms of any of the specifics, that's what one to get into the detail on, but. Certainly there are some kind of broad brushstroke elements to it. I mentioned about the weather variability, for example, and that's quite crude in terms of not accounting for that. In terms of the way that budget changes are taken into account as well, that's a difficult one. But I think there are, but also the scheme is quite tight about what you are and are not responsible for, and it's pretty clear in those terms. So. I think some people will take advantage of things that they find and get their lawyers on that kind of piece. But broadly speaking, best to be focused on what is required and look at it in that sense.
And I mean,
excellent.
It's going to be subject to quite a bit of assurance, as we've said. What I didn't pick up on, which I will now, is unclear as to how the Audit Commission use of natural resources work will go forward, but obviously it's been abolished in local government, but we do expect something still to be in place, maybe in the NHS shape to be confirmed. Also because this is financial, because it's sort of cash flows and what have you, even if the use of natural resources goes out of Audit Commission work, the financial side, the financial audit that the Audit Commission do, should be interested in this space.
Okay, thank you. I've got basically a question or a couple of questions which I'm going to link together, which relate to what's included in the scheme. So firstly, if we lease premises but pay the utility bills, do we include these in the scheme? And secondly, I'll just add on to that, we have two sites in one organisation. Electricity consumption in one does not require participation, but in the other it does. Do we need to include both sites in the scheme?
Okay, so just take those in order. If you lease but you pay the bills, then yes, you're responsible for that. If you lease but your landlord pays the bills, then the landlord is responsible for that. That's basically the key distinction there. And on the electricity consumption, you need to think about your electricity consumption for the organisation as a whole. Based on what I'm hearing there, two sites within one organisation, you need to add those two together to qualify, and therefore if you're over the threshold for qualification and meet the various criteria, then you would need to consider all of those sites as being your responsibility for the scheme.
And I mentioned PS ideals earlier. I suppose that's because in some cases who pays the electricity bills or the energy bills not as straightforward as it's either the landlord or the tenant. There may be some instances where there's a debate, and obviously if there's going to be a debate, given the timescales we talked about, it's best to kick that off early. It's one of these areas where, obviously it is right to proactively manage the contracts around those types of deals anyway. It may be an example where you need to dig out the contracts and see what exactly the arrangement puts in place for respective responsibilities, public sector and private sector.
Great, thank you. We've got quite a few coming in here, but I'll just pick a couple out for you if that's okay. If an organisation's strategy assists suppliers or contractors in reducing carbon emissions, will the organisation benefit?
Yeah, no, that's a very interesting question. I think in CRC terms, strict CRC terms, thinking about allowance purchases, then probably not, if I understand correctly the question, because it's about what energy you pay for and are responsible for. However, those types of partnerships are something that could be considered in the wider carbon strategy, and around contracts for prices, etc. There may well be benefits that can be achieved through those kinds of partnerships. So certainly wouldn't rule it out in terms of looking at wider savings.
And I think the sustainability reporting proposals, dry run this year for central government, potentially in the FREM next year, do include some measurement around the supply chain as well, depending on the nature of the supply chain. So, it may not necessarily benefit you for CRC purposes. Hopefully it'll benefit you for cost reduction purposes, but it possibly also will benefit you for sustainability reporting purposes.
Okay, thank you. I know we're getting close to time now, but I'm going to try and squeeze in a couple more questions. What IFRS requirements cover CRC and carbon trading?
This is, as I say, principally driven by the CRC without a link really to any particular IFRS standard, and then also the sustainability reporting that's going into the FREM is also, disclosure rather than any particular standard. I mean, I guess, there is something about cash flows, revenue recognition standards, and it's quite complicated actually, the double entry for this, and to be honest, I haven't worked it all out, but you obviously pay up an amount and then it's recycled, but it may not be the full amount. Certainly some of the revenue recognition standard proposals coming down the pipe from International Accounting Standards Board could be relevant in this space in terms of when you can recognise that recycling. So no specific standard, broad range of existing standards relevant for cash flow and for revenue, and as I say, revenue recognition standard is changing. Some of the financing things we talked about at the tail end of this, more important to play in accounting standards to some of of those financing ideas if you want to go down the prudential borrowing route or if you want to go down the private finance route.
Okay, thank you very much. I know we're reaching sort of the end of the session now. I'll pick one more from the selection. And there's a couple more on there which I haven't been able to read out. So perhaps if if this was still a pressing issue, there's Mark and Steve's email addresses up there on the screen. If there's any existing questions which we haven't managed to cover, then you can always obviously contact them. I'll just finish with this one then. Could you give a brief overview of the accounting requirements for the scheme? Maybe that's not a brief question, but I'm going to put that out there.
Yeah, I mean, as I said, there aren't specific standards on this. It's about cash flows and revenue recognition, and I think the most useful one is the timeline diagram about when you pay up allowances. Obviously, you will credit your cash and debit costs, and then the recycling side of that, how you recognise the revenue and your view of receiving back what you've paid up. I think the theory is that certainly in the early years shouldn't be a massive difference, but obviously as it becomes a trading scheme it may change. So perhaps in the early years it is more of a cash flow exercise rather than a sort of accruals accounting exercise.
Okay, well, we are a little bit over 12 now, so I'm going to draw the session to a close at this point. First of all, I'd like to thank Mark and Steve. It was a very useful presentation. I know it's difficult to squeeze what's essentially quite a big topic into 45 minutes of presenting, but I think that was very useful. Could I also thank all the people who took part in today's webinar? It was obviously very useful to have your input in terms of the polls and feedback in that respect. As you can see from the details on the screen, there's a few more websites you can look at, and also the details for Mark and Steve if you do have any further questions. And also we're very interested to hear feedback in terms of how you thought the webinar went and the general format and approach of using webinars for training. If you would like to send in some feedback, we have a webinars email address, which is webinars, WEBINARS, at hfma.org.uk. So webinars at hfma.org.uk. And if you have some feedback for us, that would be very, very much welcomed. So finally, I'd just like to say thank you for everyone taking part, and we hope you will join us at our next webinar. Thanks very much.